Today, the banker's deadly embrace. Hello again, it's Martin North from Digital Finance Analytics. Welcome to our latest post covering finance and property news with a distinctively Australian flavour. And today I'm joined by Robbie Barwick from the CEC. Hello, Robbie.
Hello, Martin.
Now, you've been busy again stirring the pot with regard to our banking system, and I think that you've come up with some very interesting and worrying observations this time around.
Yes, absolutely. Today we've issued a press release, called Audit the Big Four Banks, because we think with what's going on in Australia with the housing market, unlike all the other countries in 2008 when their housing bubbles burst and then they had a series of bank crashes on the back of that, we should learn from that and audit our banks now to see what the danger actually is. And the reason we're calling for that's the reason to do it. But there's an assumption that the banks are already audited, and we're trying to shine a spotlight on that as well, because we don't regard the audits the banks get from this cartel of accountants known as the Big Four accounting firms, the real Big Four, the big global four, as we cannot regard those audits as reliable and trustworthy, because the accounting industry worldwide, where these four companies audit something like 98% of the world's banks and large corporations, they're effectively a cartel, and they're horribly conflicted with the banking system. And so we have to open all that up, and that's what we're calling for.
Right, and I use the term deadly embrace because my sense is that they're often very, very close to their clients. And you know, the theory is that you basically have the banks, you have the people who do the accounting for the banks, and then you have a separate, discrete audit overview which is completely disconnected from anything that is actually in the accounts. That's the way it should work.
Yes.
But that doesn't seem to be the way that it actually works.
No, and it's a symptom of the globalization and concentration of our financial system over the decades. So you've now got a ridiculous situation with these Big Four and their dominance of this aspect of the financial system, and their track record of failures for which they've never been held to account. So what we're teeing off is just before Christmas. This is a new report issued in December by a team in the UK commissioned by the UK Labor Party's Shadow Chancellor of the Exchequer, John McDonnell. And it's come up a lot in the UK. There's been a number of high-profile cases involving the banks, but also other corporations, where there's been collapses of the corporations that have left the pension holders, the workers, and small creditors high and dry. And the accountant, once they open up the books, they could see that anybody looking at these books could see this coming for years, yet these books always got a clean bill of health from the auditors. So John McDonnell commissioned this report. It's been led by Prem Sikka, a retired accounting professor who I've had an interesting discussion with him on accounting. He's one of these guys that is a real thinker, and he's able to point out the way accountants can easily use false assumptions to cook the books, right? And you've got to be trained to be able to identify these things, and that's why the auditing process is so important. So he was the best person for the job. Everyone else involved is a real expert. John Christensen is in there. He's one of the main whistleblowers of the world's tax havens. He's been instrumental in exposing things like the Panama Papers, etc. And of course, these same Big Four accounting firms write all the laws for that process, right? The huge tax evasion industry. So they've looked at this picture and they've come up with a damning report about how these Big Four accounting firms work. And they've identified the nub of the issue is the conflict of interest between these firms providing auditing services for the big companies and the same firms providing consultancy services for the same companies. Now, as auditors, they're effectively doing a public good, right? Auditing is a statutory requirement. This is a state-mandated function. The state says companies must be audited. So when they step in and do these audits, they are working for the public, effectively. They get paid for it, right? But they are helping provide transparency to the system, without which the system cannot work, right? And, and we're talking about the capitalist system now, right? It just can't work without this kind of transparency, so that everyone has the right information to know how these companies are faring financially. So that's their job, and it's a state-mandated job. But because so many banks and corporations are so large, it takes a large auditor to be able to do those audits. And that's where this concentration in the Big Four has come from. But then those Big Four have developed a business model where only about a third, if that, of their revenue comes from auditing the companies, and 2/3 of their revenue comes from being consultants to the same companies. And so they are not going to blow the whistle on flaws in the books when their income, and it's huge income, something like $130 billion a year globally, that's the revenue of these Big Four companies, their income depends on these same corporations giving them contracts for consultancy work, right? And it's a huge conflict. So they've identified that's the major flaw here that's developed, and this report calls for a breakup. Just as we call for the banks to be broken up so you get rid of the entrenched conflicts of interest in the banking system, this report's saying, well, here's this global structure that's supposed to provide transparency. It's hopelessly conflicted. The only way to fix it up is you've got to break it up. And a company that provides audits, an accounting firm that provides audits, must not be allowed to provide consultancy services, or else the system cannot work. So that's what they've called for. They've also called for a statutory auditor to be established in the United Kingdom that can do all the audits of all financial firms, all of them, without exception. So if you're a bank, a building society, a credit union, etc., you must be audited by the statutory auditor. And that alone will be a big change to the system, right? It locks these Big Four crooks out. And I call them crooks. I want to go through a few examples, but the track record shows that they have just aggressively helped to cover up so much fraud and dodgy bookkeeping that has caused a lot of misery, including the major financial crisis we've gone through.
Mm. And it's worth saying, I think, that post-Enron, which was before the GFC, wasn't it? There was actually a teasing apart of audit functions and consulting functions, and in fact some of the consulting and audit businesses split away and essentially recognised that there was a conflict. But in the decades since then, effectively they've all come back together again and reconsolidated and just got bigger again. So effectively we've gone around that loop before, and we're back now to where we started.
And that's the thing. I don't regard myself at 44 as an old man, Martin. But I remember Enron's bankruptcy very well. I remember the fallout. It's not that long ago. It's less than 20 years ago, just. And therefore, when you can learn those lessons from an Enron and then so quickly unlearn them, right? Who was guarding the system to say, hang on, why are we letting this happen again? Right, and that's why, and it just shows you that unfortunately, the way that our system works, there's been very little political will for real reform. We have to take an opportunity now to make sure it does happen.
Yeah, and the other point I was going to make was that, of course, those very organisations, those advisory organisations, are also advising companies on minimising tax, and tax structuring and off-balance sheet manipulation, all those things, right? And again, you've got this complete tension between the audit function and this tax minimization and shifting stuff offshore and shifting things off balance sheet. So again, we probably even don't have a true picture of the risks within, for example, individual banks or groups of banks, simply because of all of that complexity that's been developed. And in fact, people have paid big bucks to try and actually find ever more sophisticated ways of tax minimization.
Well, let me read a quote from this report on that very question, because the report uses this term that the Big Four auditors have colonised, they said, the British Tax Office, HMRC. they've used that term, they colonise it, and they've colonised the regulators as well. They make that point, which is a great term, right? It's this regulatory capture, but because so much of these government departments, including regulators in the tax office, outsource so much work to the same auditors, right? In terms of the tax, the tax evasion infrastructure globally is such a debilitating system that national governments have to constantly contend with. It undercuts revenues by a huge amount, right? And in countries like the UK, it's many tens of billions of pounds is spirited out to these tax havens. Well, they've got these 4 firms in there writing the tax laws. They get to write the tax laws, and then they get to turn around and help their clients evade the tax using the laws that they've been able to write. And this is a scandal. So you can't rely on anything they do. And then another quote is for Australia as well. This because Michael West, the investigative journalist, did an initial report on this in 2016 on the Big Four here. He quoted Martin Locke, the former head of withholding tax at the ATO, who said about the Big Four. He said these same stalwart firms are ensconced on the Board of Taxation, its working groups, CPA Australia, the Institute of Chartered Accountants, and the ATO's very own National Taxation Liaison Group, which the ATO describes as one of the ATO's 8 stewardship committees, which addresses strategic issues to benefit Australia's taxation superannuation system. And so they're completely, they've got their tentacles in all of this, and they have huge influence over the system. So when it comes to, what's the reliability of the audits? And that brings us to the question of Australia, right? So Australia is in a parlous position right now, which I think most of us can agree on that. We've got 4 banks that control 80% of our financial system. Enormous concentration in the financial system in Australia. Those 4 banks have over 60% of their business in one sector, housing. And I did these comparisons a little while ago. No other banks in the world have actually come close to that level of concentration of mortgages. I mean, in the United States, it was into the 40s, and in the UK, I think it barely broke into the 40s in terms of percentages of lending into mortgages. The US, if you read the Angelides report in the US on the global financial crisis, they report in there that the interest-only loans in America peaked in 2006 at 25%. That's what they got to as a peak. Ours got to close to 50% in 2016, right? And in the UK, as Joe pointed out to you in one of your interviews last year, 18% interest-only loans. So we've got this concentration not just on one product, but on these very risky loans into that product, interest-only loans. And now the collateral for all of those loans is starting to sink like a stone, right? And I was just reading, going through your latest post about the credit is also starting to plunge into the property market. So then the question is, okay, what's the true state of the Big Four banks, right? How are we going to know that? Well, we've got to audit them. Can you rely on the audits of these Big Four companies? And their track record says no. And I'll give you some examples. Lehman Brothers was given a clean bill of health by Ernst & Young 2 months before it went bankrupt in 2008. And it had been given in January, that was in July, in January that year, it had been given another clean bill of health for its its annual report in January, and then its quarterly report in July that year. 2 months later, it's bankrupt, bringing down the whole financial system, right? Lehman Brothers had conducted a scam. It was so leveraged, over 30 to 1. It had, every time it closed its books, it had invented this scam. It was a $50 billion repurchase agreement where it would sell $50 billion worth of assets at a 5% discount to a partner, close its books, do its accounting, the money, the cash from the sale, paid down its debt temporarily. Once the books were closed, immediately buy back those assets, right, and the debt went up again. And it did this year after year after year, and Ernst & Young helped them do it. And so the New York Attorney General accused Ernst & Young of helping perpetrate a massive accounting fraud. But did it get into? There was just an accusation. Didn't actually get to dig over that, right? That's the bank that brought down the global financial system in 2008.
And did you see that the BIS in the last month put out a release to say that they are changing the rules to take an average of capital across the quarter rather than a point in time? Because they were accusing banks today of doing precisely the same, window dressing at the end of the quarter to be able to keep their capital ratios in the right place.
There you go. And so that's good, because, and you see, obviously there are people within these, a lot of these institutions are useless or worse, but there are people within the institution that are trying to do their best. The other example I just want to cite quickly is Northern Rock. Northern Rock got a clean bill of health just like barely a week before people started queuing up outside, right? Total clean bill of health from the auditors. So you cannot, so that's their track record. These same Big Four auditors, and they audit our banks, and we've got to look at that and say, okay, we can't rely on that. Therefore, we need a statutory auditor here, which we have. The Auditor General's department here is a statutory auditor. That should do this. So we've done a bit of history. It turns out this was a standard function of the Auditor General up until 1998. And we know why that date's significant, but just to recap, it was first recommended by the 1937 Banking Royal Commission. I've got a copy of their report here. And that Royal Commission which looked at what happened in the Great Depression here, but it also was informed by the experience of massive banking crashes in Australia in the 1890s. That Royal Commission looked at this and said, look, you have to have a system whereby the government authority, in that case I was talking about the Commonwealth Bank, needs to be able to know if it has to step in and take over a bank in order to protect its deposits. And therefore the Auditor General must have the power to do that. That was legislated. That was recommended in 1937. It was legislated in 1945 by Curtin and Chifley. It was re-legislated in 1953 by Menzies. Legislated again in 1959, Banking Act by Menzies again, when he created the Reserve Bank. And that function of the Auditor General remained until 1998. And then they set up APRA, right, the Australian Prudential Regulation Authority. And the bill that created APRA said APRA should do these audits, but can pick whoever it likes to do the audits. And so who does APRA pick to do when it wants to audit the banks on something? Who does APRA pick to do that job? Not the Auditor General, the Big Four accounting firms. All right? And so last year when APRA announced these stress tests, the banks are a clean bill of health, and they would lose a maximum of $40 billion, and all this thing that you were able to destroy the credibility of very quickly, and other people as well. I mean, you see, there's actually no real intention to get to the bottom of this. So we cannot trust them. And if we want to know what we're dealing with in the system, we have to revive this function where the Auditor General is able to conduct independent audits of the banks. And with what's going on now, that should be an urgent requirement on it, and the government should legislate to do that.
Well, it's worth making the point, isn't it, that at the moment, the value of properties held against mortgages in the banks, right, the value in their books will be the original valuation that was actually taken at the time the original loan was actually written, right? Because nobody does much marking to market after that, right? No. Now, we know that property prices have slid. In Sydney, they're 12% or 11% off their peaks, 7 or 8% in Melbourne. We know that in some postcodes, they're 20% off. And my own modelling suggests that, in fact, the number of households in negative equity now is close to 400,000 across the country, right? None of that is actually effectively translated back into the risk profiles within the banks or the capital ratios inside the banks. So that's just one example of why we need a more transparent and more clear-sighted view of what's really going on inside the banks. The regulators rely on the accounting functions within the banks plus the auditing functions from those big external accounting firms. But there's no cross-checks and cross-balances to make sure that they actually are doing it right. So effectively, we are flying blind. We also know that there'll be a lot of off-balance sheet manipulation also gone on as well, so the real risks probably aren't actually accurately reflected. And we also know there will be some window dressing at the end of each quarter, because that's traditionally what people do. So we are absolutely flying blind at the moment into a crisis. And so I agree that there is a need to have much greater transparency so we can really understand the risks in the system that we actually are facing.
I think if we did this, it's probably I couldn't possibly. I don't think I can think of a precedent where, given the derivatives question of banking is such a fairly new phenomenon in the last 3 decades, and that's been the neoliberal era of hands-off regulation, right? And not really looking at it. I doubt if any actual authority has stepped into a banking institution and said we're going to go through that with a fine-tooth comb, examine all the assumptions on all those derivatives, because there's huge numbers of assumptions, and get to the bottom of that. And if we did that, you could set off something potentially very big, because there's they get away with it with this kind of derivatives gambling until something goes wrong. And of course, when it goes wrong, it goes very wrong because their assumptions are never correct. And someone like this auditor, general function, should do that and say these banks. One of the justifications is these banks have an implied government guarantee. Everyone knows they do. Therefore, it's the government representing the taxpayers has every right to say you assume we will step in and prop you up. We're going to see exactly what the situation's first, and that's what the discussion in 1937 was about. So yeah, get in and drill down into those things and find out the real situation. Find out the real situation with the risk weighting and the way the banks have rigged those types of things in their favour, etc. Find out, if you did do those kind of scenarios, if you did mark to market now, are these banks already underwater, right? Because they claim they claim risk-weighted capital of 14% or something, but their actual capital is barely 6%. So if it doesn't take more than around a 20% fall in their main asset class, mortgages, right? But the property prices bopping up mortgages to just destroy all that capital, the buffer for that for the banks. So we should be looking at. That's why there's a certain urgency here. And I think for the viewer, in our press release, Martin, we've called on people to get involved in this. I mean, we've added it to the mix. We're campaigning for Glass-Steagall urgently. We're campaigning we want people to think in terms of Australia needs institutions like a public bank. But this is one of those things that the urgency cannot be exaggerated, right? And it's something this could be done in a heartbeat. Like the Treasurer could order this tomorrow, right? If they didn't take this hands-off attitude to the banks. And they do have a hands-off attitude. On the 29th of November 2017, the Greens and National Party agreed when they were drafting their own terms of reference for the Royal Commission that had not yet then been called. They put these big 4 accounting firms in it to be investigated. And if you know the story, Barry O'Sullivan was the senator, his office door was open, and Sam Dastyari was going in and out, and the Greens were going in and out, and the Independents were going in and out, and they were preparing this potent terms of reference for the Royal Commission. Kelly O'Dwyer goes past, sees this, flips out, and that's when the next day Turnbull jumped, whipped out his own terms of reference, and that the banks approved of, but what was excluded? The accounting firms. And I think one of the reasons, obviously, there's probably multiple reasons, but one of the reasons is the banks are Australian banks, but these accounting firms are global. And if that Royal Commission was able to do to them what it's done to the banks, there'd be global implications already from that. But we've got to get that started. So they're going to protect them. Therefore, people need to demand this. So we've encouraged people to forward the press release to members of Parliament and put pressure on them. Demand this kind of audit, especially the Labor Party. The Labor Party is likely to be in government in a few months. Well, their UK counterparts have just commissioned this report, a very potent report, right? What will the Australian Labor Party do? Will it go after these crooked institutions, or will it leave them untouched? And that's not acceptable.
It's certainly timing is everything here, and I think you're right. There is an urgency to it, particularly as the financial situation in Australia looks like it's deteriorating, and home prices are continuing to fall. But we really have very little sense of what's really going on. And of course, that means that we could suddenly find a bank falls over without any notice. So it's really, really important. Okay, well, we'll put a link through to the announcement that you've made in the press release so that people can actually go get it and then forward it if they so choose. I think it's a really important topic, Robbie, and I appreciate your time today going through it with us.
Thanks, Martin. Thanks for helping us get the word out.
No worries. Talk to you soon. Thanks.
All right. See you, mate.
So there you go, a very important message there from Robbie, and it's certainly clear to me that an independent and objective audit of the major banks would be very beneficial at this time. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you next time.